Hello, everyone, and thank you so much for watching this week's cryptocurrency market update. In this video, I'm going to be covering Bitcoin and Ethereum. We covered XRP just a few days ago, and I'll briefly update that one, but not much has changed since the original analysis, so we're going to stick with that for now and play it by ear. But for Bitcoin and Ethereum, we're going to cover the recap from last week and what took place. Obviously, we all know by now that we had quite a run up in the market last week, so I'm going to cover that. A lot of exciting stuff took place last week and is setting up for the week ahead here. It is currently Sunday evening, so we did just have the weekly candle closure 2 minutes ago, as you can see here. So I'm going to cover that and also outline what I think will take place into the end of the month of May here. A legendary month so far with the bullish surge that we've been experiencing. So without further ado, let's get right to it. As you can see so far, what we have in front of us is the Bitcoin weekly chart, the weekly time frame right through here. And let's get rid of this real quick. So last week, we did see a 17% increase on Bitcoin after closing just actually pinned right on the $7,000 handle. We did pull back slightly in the beginning of the week and then saw the surge straight through the upside 7,500 and into the $8,400 price resistance on Bitcoin. So a lot of bullish sentiment out there in the market. There's a lot of euphoria. People were getting very excited through there. So it was definitely a good change of pace, starting to see some green in the portfolio and some of the long-term holdings, whether we're talking about the major pairs here or even the altcoins. The altcoins were having a little bit of a surge there in the middle of the week. So that was also a beautiful sight for many long-term holders and even for some of the swing trades of the opportunities we've been covering in the prior weeks. So a lot of euphoria here. As you can see, the weekly candle closure was quite bullish. We did close above the prior swing high here of $7,800 here. As you can see, this was the high from mid-October of 2018. And so having the weekly candle closure above this prior swing high was definitely important because it signals that we should very likely see further upside to come and that this bullish momentum should sustain. Obviously, the slope is ever increasing and it is quite dramatic in this run up, but in this market, especially when we start seeing movement to the upside, it really does move. And that's exactly what we've been seeing in the past 3 months, really since the beginning of April here on Bitcoin and a lot of the other cryptos. So guys, a lot of people, let's just recap what took place last week in the beginning. So last week in the beginning, we tapped $7,500, pulled back slightly, and that was the beginning of the week. Now, because of that slight retracement, a lot of people were thinking, okay, this is our time to short. Now we're going to have the retest of 6,000 or, even, that's another prior swing, that's another prior lower high. So, they were shorting that. They were expecting the retest lower. Obviously, that wasn't the case, guys. Be very careful of who you're listening to at this time in the market. There's people on two sides of the spectrum. The ones that have missed a lot of this movement, so they're gonna take every chance they have to short this because they missed this run up. So they're sad that their money's on the sidelines and it isn't growing. They're not catching these wonderful moves. So you have to be careful listening to that side of the audience who's going to short every move here, and they're going to give you every setup possible for that. And also, you have to be weary of listening to the ultra bulls, the people that are saying that we're currently in a bull run, saying charting up for 20K, the CNBC type of experts. You can't see the air quotes, but they're there. These experts that are saying, we're in the bull run now, 50K, 100K any day now. You have to be very, very careful and cautious of those kind of people because obviously a lot of these people are biased. If you've been in the markets for the past year and a half, 2 years through this bear run, then you've sustained a lot of losses through here. You might be in green overall in your portfolio in the long term, but obviously with the crypto market pulling back as much as it has, your portfolio is probably in a little bit of red in some areas. So those people are biased. They're looking for the bull run as an easy cop out to either finally tell their wife that they can, go on a vacation again, or that they can finally, afford the the large size of fries instead of, just the small. So a lot of people are biased in this current marketplace, whether that's ultra bearish or ultra bullish. You have to be very, very cautious of who you're listening to. So as always, I'm going to give you both sides of the coin here. Obviously, I am still bullish biased for the time being. I'm also going to hedge that with saying we're not in a bull market right now. We're seeing bullish upside within the bearish market, but we are neither in a bull run, and we definitely are not. We definitely are not going to shoot straight up to 50K like some people are saying. So I'm going to give you both sides of the coin here. And yeah, so let's zoom in now here on the daily chart for Bitcoin and kind of lay this out a little bit closer. So like I said last week, we did see the surge to the upside, pulling back slightly on Sunday and kind of having this upper wick rejection off this key $7,400 level. But on Sunday, we saw the push to the upside quite quickly, and it ruled out any sort of a retracement into 6K. So seeing that blast right through the $7,400 level, we very soon saw the $8,400 region being tapped. Before there at the end of the week, we saw this, I want to call this a reversal, I'd more say a retracement. And especially on this day, on some charts we saw a massive lower wick on the BitMEX chart. On I think Bitstamp as well, we saw a huge lower wick here that filled the CME daily gap on the Bitcoin futures, which was very important. Obviously, if we're going to see sustained momentum and if we're going to see a continuation to the upside, that had to be filled at some point. So better sooner rather than later, which is always my saying, and especially if we're going to see sustained momentum like we are seeing here. So always good, in my opinion, to get that out of the way so that we can see the higher price discovery as soon as possible. So something to note also with that retracement, the weekly candle was looking a little bit grim here. Just kind of give you an example of that. If we would have had the weekly candle closure above here, above the prior high, the weekly high here, that would have been a little bit more bearish. I would have probably been signaling the reversal coming back down. Not reversal, but that a retracement was likely in the cards here for this week. However, on Sunday, yesterday, we did have quite a run up here, about 12% increase overall in the crypto market cap, and that was the likes for a lot of the other major pairs here. I know Bitcoin, Ethereum, XRP especially had upside, and some of the other altcoins joined in. I know Bitcoin Cash had quite a push, and Dash was another front runner. So a lot of green momentum through here. Obviously, people were kind of questioning that maybe we had a double top on the 4-hour or whatever. Like I said, guys, people who've missed this move so far this year are gonna tell you whatever way possible that this is the reversal. We're gonna pull back now. And like I said, it's just that it is just hope, and it is just the biased nature of them speaking the true facts that they are looking for. That they're more so hoping for that. And hey, guys, one of these times they're gonna be right, and you're gonna hear about it. Trust me. These bears, they definitely will let you know when they are right. And so just be cautious of that. Don't let that throw you off your game. Just be very patient. Stick to the higher time frames. Like I opened up this video talking about the weekly. I really only look at 3 time frames. Of course, I look at the monthly, but that's only ever so often. I usually have a general picture of what that looks like. So I stick to the weekly, daily, and then 4-hour. You don't need to zoom into anything anything finer. You don't need to be looking in on a 1 hour of, this scenario, this, and that. It's just going to throw in a lot of confusion. So keep it simple. Look at the higher time frames, and you don't need to be staring at these charts all day, folks. Just let it do it. Just let it do its thing. Stick to your analysis and stick to your bias, and form a plan and let it play out. So that's kind of what happened when we saw this slight pullback. I was kind of telling some of you guys all to look to buy the dip here, look for a buying scenario, and I think that really is what this was. We pulled back. This was the double top that people were talking about. And sure, there was a little bit of a bearish move here to be had. You could have either traded this intraday or also trimmed some profits and look to reinvest those on the dip. I elected for the latter part, trimmed some profits, bought the dip on Ethereum and XRP. So that's my way of taking advantage of that pullback, or not even that. We could have ran to 10K from here, but it's always smart to trim some profits and take some profits when we are in a bear market right now, and also to pay yourself for the hard work that you're doing, to make it worth your while of staring at the chart for all this time, for doing the work that you are doing. So always important. Now, guys, we just are opening up here. Obviously, we are seeing a little bit of a pullback here, down currently 1%, nothing major. So interesting to note there. We did come and tap this $8,400 region once again. We haven't had a 4-hour closure above this $8,200 mark. So that will be interesting to note as well, something to keep your eye on. Obviously, this could be a bigger picture double top through here. Left shoulder here, right? The second equal high here. So be cautious of that. We start seeing a retracement, that could be the case. But the reason why I am still bullish is obviously if you're looking at this, quite a strong candle. So we could come down and retrace this to the $7,800 before making a third test of this to see if we can break through the highs here. But when you're seeing the momentum like this, guys, we're currently we're on the daily chart, we're in a bullish trend. So don't look to short this, just look to catch the retracements, look to trim profits at major resistance levels, and just stick to that higher time frame bias. That's why I talk about it so much, and why I really do believe in that is because you might be able to catch short positions through here. You might be able to catch a couple 1 or 2 day bearish trades, but other than that, there's really not much to it. Right now, you're counter trading. You got to be very nimble if that's how you're going to do it. So what's to come for the week ahead? Like I said, I think that we could possibly come down and retrace the $7,800 level. If that's the case, so be it. Then from there, I think that if we were to draw something out like that, I think it would be something like this, and come up to test this $8,400 region to the $8,500. That what is the prior weekly swing high. So if we can see a breakout above this $8,500, $8,600 mark, then expect a slight retest of that before we're off to the races to the upside into the 10K region. As you can see right through here, there's really not much resistance through this level above $8,600. So if we get a break in a daily closure above there, or some kind of confirmation that we broke out of this level and it has tested support, look to see that next leg to the upside into 10K. I think that's a very likely scenario here. The momentum is bullish. The momentum is strong. So I think that we could easily see that this week. I would not rule that out. Now, something to consider for the bullish case of this, if we pull up the fib tool through here, the swing high to low. Right now, obviously, as I was saying, we are still in the bear trend, and if we take the wave 1, you can see wave 1 to 2, 3 down, and this is the wave 4. This is the retracement. So as long as we don't have a weekly and monthly closure above this $8,500, $8,600 mark, we still are currently in this wave 4 downtrend. Now, if we see the closure above here, above the 786 fib level, which aligns with that $8,600 level, like I stated, then that's when I'll be kind of looking for a a second confirmation of the upside break, probably above 10K to confirm that bull run. But until then, I think that is what it is. I think we are kind of just retracing from the original sell-off and overshooting a little bit. You could argue that this is a little bit of a bearish squeeze taking place right now, short squeeze, and wrecking some of the people that keep on trying to short this. So for now, we could another scenario to keep in place, that if we have a quick tap to the 10K region through here and then pull back into the middle of the week or into the end of the week and just form an upper wick through there, kind of like this candle, or something like this candle, a large upper wick tapping that prior resistance, then that's when I'll kind of be thinking that we probably most likely do have the further retracement. So just something to consider. I'm really not going to get overly excited about this until we see the closure out above the 786 level. And to me, that's when I'll be looking for a little bit more of a longer term bullish sentiment. So that's that. I think we pretty much do have it covered through here. Looking at the 4 hour now, pretty nice retest. Pretty nice retest to 8K so far, excuse me. And yeah, I think it's very likely that we could see that retest either in the beginning of the week here, either on Sunday or Monday. And to me, that would be where I'm going to be watching for a break of the high end of this zone for that push to the 10K region. So yeah, guys, I think that pretty much sums it up for Bitcoin. Now, let's move over to Ethereum. Pretty straightforward and also semi-similar to the Bitcoin analysis. Last week, we saw just shy of a 40% increase here. Quite a push, guys. I was really excited to see this for Ethereum for my long-term holdings, but also because Ethereum, considering that it is a token and considering that there are a lot of the alts built on top of the platform with ERC20 tokens, it triggered a surge earlier in the week for the altcoins. Like ZRX, I know was definitely having quite a run. I really like that on the Ox token. IOTA was another great runner for me. So some of these tokens that are really seeing some upside through here, and that is something that I think will likely continue, especially if we see Bitcoin kind of hold steady and Ethereum continue to the upside. I would watch for that. Now, like I said, with Ethereum as well, earlier here to begin the weekend, actually just a few days ago, it was kind of looking a little bit more likely for a pullback on Ethereum, considering the candle was closing just around through here and even below this around the 220 region. So, it looked a little bit more grim for the bulls. However, yeah, on Ethereum, we had the weekly candle closure above the prior swing high here of 255. That was a good sight to see for the bulls. And to me, it kind of does confirm that we should see likely a continuation to the upside here into the next resistance being the $300 zone. $300 to 320 is really the mark I have through here. A weekly liquidity zone, as you can see. So I very much do think that if we have a pullback into the beginning of the week, that would be healthy. However, zooming in here on the daily in a minute, I will show you that I think that probably already took place. And that's why I'm a little bit more bullish in the beginning of the week. And I think that we could easily see the continuation to the upside, considering what we had yesterday taking place. So yes, very, very much still in a bullish run through here right now, and I think all eyes will really be on how we close into the end of May through here. If we close like this, quick peek at the monthly. If we close like this, obviously it will probably signal slight retracement. However, if we can close above this $300 level, that will be very substantial. That will bring in the upside $400 level next, because there really isn't much resistance through here. As you can see, $400 being the next zone of resistance. So very, very nice sight to see. And let's zoom in now on the daily chart and take a look. So through here, as you can see, like Bitcoin, mid week on Friday, we started seeing a retracement lower. We saw the 220 zone retested to perfection with this lower wick. It was a beautiful sight right through there, and nice pullback. For those that took profits at this 280, 270 level, that was a great time to buy back in lower. What do I mean by that? So guys, if you've been adding through here at the 170s, you can have some profit taking through 220, 270. And let's say you sold at 270 here and bought back at 230. That's a 15% price drop. So if you took $1,000 of profit through here and bought back through there, that's a 15% drop. So you can just reinvest those profits, buy on the dip, and look for the next pullback. And push the upside, the next leg higher. And that's a great way to build your current portfolio. That's a great way to grow your holdings. I'm not recommending that you sell all there. I'm saying if you trim 10-15% on whenever you reach a major resistance level here, and you reinvest those on the dip, that's a great way to grow your holdings without having to reinvest a larger sum of money. And as well, it's always smart to take profits, guys. Who knows? This could easily have been all that was, and we could be back in $200 land, and you'd be like, holy crap, why did I, I was up a good chunk of money. Why didn't I, take profits? It is all just paper money. It is all just what ifs until it is realized. It's unrealized until you sell out your holdings back into fiat and either withdraw that from the exchange and look for another opportunity in life, or you keep that cash on the sidelines for the dip and look for another opportunity in the crypto market. So it's what I elected to do. I think it was a really good idea. As you can see here on Sunday, we did pull back up into this 260 level, into this 260 region. Now, for the short term, I do think, like I said, I do think that we can see the $300 region. Zooming out a little bit through here, you can see there really isn't much resistance above this 270 level. So if we get a daily closure above here, or if we get a 4-hour and we just blast through this zone, I think it's very likely that this $300 region is on the table in the shorter term. It could happen in the beginning of the week here, or we could consolidate for a day or two before we see that push to the upside. So keep that in consideration. Now, kind of if we pull up the fib tool through here, this is really that reminded me that was the case. So let's go about here. I think that looks good. So there you can see this A to B. Then we had the retracement down, tapping this 230 zone and obeying the 382 fib support. So that is, I think, probably the current wave right through here. As you can see, the 2.7 extension aligns right in this $300 region. And also very nicely, we have the 100% extension lining up with the $400 zone if we do see a break above this 320 level. So for me, I'm still bullish in the short term and medium term. And if we do see something, I think this is probably the most likely scenario. Obviously, it won't be a straight line like that. But if we can see a breakout above this 320 level, we could most likely see the retracement before creating that next leg to the upside. I very much do think that this is the case until I see some major reversal or some major signal that tells me otherwise. I'm going to stick to the higher time frame bias, which is still bullish. So guys, let's just keep it simple. Don't overthink this. Don't FOMO in. If you're missing out on this run, do not FOMO in. Heck, I had people that were probably chasing this through here up into the 270 level. And yes, guys, it could, if you're looking at just this, guys, this is quite terrifying if you're on the sidelines. You're like, oh, crap. I knew I should have bought in the 170s. I knew I should be catching this right now. And if you're missing out on it, so be it. that's fine. There's always going to be another opportunity. It's like a roller coaster. You can enjoy the ride, but it will always loop back around. Now, if you missed the turn, if you missed your turn, just wait for it to loop back around and hop on this time. You know, learn from this. Do not FOMO in at 270. Heck, even waiting for a retracement there would have saved you about 15% versus right now, if you bought at 270 and FOMOing in on Ethereum, you'd still be in the red slightly, even after a tremendous 11% up day yesterday. So, guys, very simple stuff. Ride the trend, trim some profits on these upside targets, and until we see any major change in price action, just enjoy the run that we're experiencing. So, guys, real quick, actually, yep, let's tap on XRP really quickly. I know a lot of you guys saw the video I made on Thursday, so not much has changed through there. The only thing that took place was we had that test of the 36, 38 support region. It did hold that support, and we kind of had this double bottom form before pushing up into the 42-cent region just yesterday. So very nice to see there. The upside targets of 50 cents and 60 cents are still in play. If we can see a break of this 46-cent prior swing high, that's what would signal to me that is the case. Now, same thing through here. I personally, and I know a lot of others, sold here at 46 cents and waited to buy the dip through there. Now, for demonstration, that is about right through there, about the same, about the 20% drop in price. If you took $1,000 profit through there, you could reinvest through here, and that's a 20% decrease. Now, there, bam, you're up 20% on that holdings. Say you would have sold 10 or 15% of your overall holdings, and you can reinvest there on a dip. That's a great way to secure profits and also grow your holdings. So pretty simple steps and tools I use there for my long-term holdings. And yeah, guys, so I really hope you enjoyed this video. Thank you so much for watching, and I'm excited to see how this week plays out. Thanks.